So today we're going to go over 3 more case studies today. Because we're here in the United States, sometimes you might not have heard of a term called VAT, or value added tax. Here we pay a value added tax every time we go to the store. It's called a sales tax. And so a value added tax is akin to our sales taxes. And so when you buy from a vendor in the European Union, for example, you have what they call a value-added tax to pay to the taxing authority in that local area. So what happens then is you have a business, and a business is doing multiple transactions, and each of these transactions labeled as 1, 2, 3, 4, 5 through 8. If both the taxing authority and the business are member of the same blockchain, the taxing authority can very quickly tell the business what their particular tax rate is for the particular jurisdiction that is you're purchasing the part or the product in, and very quickly the blockchain can then do the calculations in a smart contract to calculate the taxes and then send the taxes near real time. So I make a purchase from a place there, and my business is going to consume that product and not sell it or resell it to somebody. If my business is going to consume the product, then I owe a value-added tax to the taxing authority. So through the blockchain, I'll know exactly what the rate is. Once I purchase it and get the product, I can pay the vendor their portion. I can pay the value-added tax straight to the taxing authority, and away I go. The other end of that is that if I sell a product and I'm in a certain taxing authority, when I'm creating my invoice, I can make sure that my invoice is accurate and tell from the taxing authority exactly is the amount of the value-added tax that needs to be paid by the particular business. Okay, so that's how the blockchain can help the taxing authority. So what happens is, here I've highlighted this section here, it says when settling VAT taxes, invoices play a significant role and won't change in a blockchain-based solution. However, blockchain allows the stored digital invoices on a shared ledger that both seller and buyer can verify between them. Because the data is immutable, smart contracts execute the programmable processes, in other words, smart contracts, with the possibility that you can automate the settlement and route it to the correct taxing authority almost real time. So Deloitte & Touche then identifies 3 big benefits. It says VAT reporting relies on individual businesses to correctly settle VAT amounts. A lot of times that's done in an Excel spreadsheet, and it's done through the math on an Excel spreadsheet. And businesses, of course, run the risk when they do that. What generally can happen is if you're a little bit off, you can incur penalties. And a lot of times that penalty can eventually add up. So the more accurate the information is, of course, the better it's going to be for the business. They'll save that little bit of money. Now, it adds up after a while when you've got thousands of transactions. The good part about having a blockchain with all that information agreed to on a distributed ledger is that it can be paid real time. Now, generally what happens then is you end up with a situation where a lot of times a business will pay at the end of the month or the end of a quarter or the end of a week, depending on their volume. And when you're adding all that stuff up, a lot of times you can make mistakes. And then if the taxing authority decides to audit your business and finds those mistakes, it can lead to more fines and other problems, other legal problems. So VAT statements are submitted in discrete time, monthly or quarterly. The risk of wrong or fraudulent submissions will be highly reduced. So let me show you another graphic that helps in this situation. Here you have generally the green here is how it happens in a business real time. Generally, a VAT invoice is issued by the company. In other words, you'll attach the VAT, the value-added tax, to a product you've sold, and then the client pays the bill, so you collect the tax. Okay, then the next thing here is the information about that payment is recorded into a system. In other words, You'll record it into your ERP system or your accounting system. And then the company pays their suppliers with an X bank transfer. Okay. So the supplier gets paid through a transfer from the bank. We work generally, large companies work with several major international banks to pay each vendor. And then the company calculates and submits the VAT tax to the taxing authority. Okay, that's the way it happens generally in a company that's doing it all manually or with internal systems. So let's say that the buyer and seller agree to invoice each other on a blockchain. The smart contract calculates the VAT and submits the VAT amount directly to the taxing authority, and then instantly updates the VAT balance between the company and the taxing authority, taking care of it in a very seamless and quick way. So the buyer and seller exchange their money. The VAT tax is paid directly to the taxing authority, and everybody is happy. And then at the end of the quarter or the end of the week or the month or the quarter, the company would then compile and submit a report to the taxing authority that says, here's how much we owed, here's how much we've paid. If there's a little bit of a difference, that you settle that difference. But generally in this kind of a system where it's done one at a time and it's done very quickly, the difference would be very negligible, if at all.